Hello and welcome to the CIS YouTube channel. My name is Alex Philipatos and I'm a policy analyst here at the Centre. Sitting here with me today is Rod Sims, who is the Chairman of the Australian Competition and Consumer Commission and the former Chairman of the Independent Pricing and Regulatory Tribunal for New South Wales. Rod, thanks for joining us here today.
Thank you, Alex. Not at all.
It's great to have you. Jumping straight into it, I wanted to ask you about the state of Australia's grocery market. So Australia is one of the most concentrated grocery markets in the world, certainly in the Western world. Two main grocery chains, Coles and Woolies, together make up, I hear, roughly
70-75%. Yep.
That's right, of the entire market. By contrast, two main chains in the UK, Tesco and Sainsbury, occupy a lot less, and in the US even less. So why is Australia's market so concentrated, and what do you see are the key challenges that may need to be overcome here?
Why it's so concentrated is always hard to tell. Of course, one of the problems is we've got a smaller market than the UK, and it's largely a city-state market as well. So whereas the UK would have, 55 million people based in you could squash it into Victoria, we've got now 22 million, but across a bigger continent. But of course, they've grown up. The population's grown quickly, so they've grown up into this position off the base of a fairly small population. I expect that's got most to do with it, but of course you've also got history and circumstance. Coles and Woolies, of course, have been in Australia for a long time. They've got well-established names, and they did a bit of acquiring early on, but more recently their strong position has been built up through organic growth and through individual acquisitions. So it's not something we allowed to happen through a large merger. It's more that they've grown largely organically when they got beyond a certain level.
I see. In light of the price wars between Coles and Woolies, particularly with products like milk, where we see prices coming down to almost $1 a litre, that tends to hog the headlines quite a lot.
Yes.
We usually think of large conglomerates using their market power to hike prices on consumers, but that's not really what's been happening. Instead, consumers have seen greater competition between Coles and Woolies. Does this mean that market concentration is not a particularly important issue for the grocery market? And should consumers be concerned about the level of market concentration?
Look, you've had a couple of new players come in. So you've got Coles and Woolies at about 70-75% of the market. Then you've got the IGA stores, which are loosely or not so loosely aligned with Metcash. And then you've got Aldi that's come into the market, and Costco. Costco's really small, but nonetheless they're a discount supplier who pride themselves in charging less than Coles and Woolies, and Aldi also have tried to undercut them. So that's put price pressure on them, and it's always great in a market where you get new players coming in. We talk about our banking sector. Well, there's 4 players there, and normally you'd think that's fine, but the question is how often do they get challenged? Whereas at least in the supermarket sector we have had some new entrants, so that helps. Should consumers be concerned? Well, look, we're focused on, there's no question that with Wesfarmers' takeover of Coles that they've been invigorated, and there's now a battle going on between the two, and that's leading to some lower prices, and of course consumers are the immediate beneficiaries of that. Nonetheless, the margins of Coles and Woolies are still pretty high by world standards, so we shouldn't think that consumers are on a one-way bet here. But the concerns that we've raised or that have come to us really are twofold. One is how the supermarkets treat their suppliers. There's been allegations of what we would call unconscionable conduct, and we're investigating those allegations because for many companies, Coles and Woolworths could be up to 80% or more of their business, and so to lose either one of them puts you in a very difficult position if you're a small business, and so that is an issue, and if they're treated in ways that could breach our unconscionable conduct laws, then that's a concern. The second issue is that Coles and Woolies are now vertically integrating, and whenever you have vertically integrated businesses, that's something that does capture our interest. So not only are they the warehouse for brands, they're also selling their own products. So you can go and buy anything from tin fish to soft drink to whatever, and you'll see a home brand competing with the branded product. And so there's been allegations that they're misusing their market power to benefit the home brands versus the branded products, and we're looking at that as well. I think you always in these issues have to take a short-term view and a long-term view. The short-term view is that there's a fairly robust competition at the moment. The long-term view is, say, if with this level of market concentration, if they do misuse their market power, and I emphasise that's just an allegation at the moment, then you may find that as consumers go into a shop, they're really only faced with one brand or a home brand, and so they're not getting the choice they once had. So these are the sort of issues we're looking at.
Okay, so you are right that we talked about the impact of the bidding war on customers. The main concerns of market power are, like you say, with the other end of the supply chain.
Yes.
Bob Katter last year called for federal action to deal with the plight of local suppliers who are allegedly getting squeezed. Like you said, there's a short-term view and there's a long-term view. Do you think there's an extra role for government, more legislation, or is it simply a case of wait and see how it goes at the moment with the current structure with the ACCC?
Look, largely see how it goes. There's been a number of suggestions, Alex. One is Bob Katter and others have called for giving us divestiture powers where we could order Coles and Woolworths to divest some stores to create a lower level of market concentration.
Okay.
We're pretty cautious about those sort of views because that's a very interventionist stance, and of course if you're given that power you'll be called upon to use it in all sectors, and I'm not sure really we want to be there. On the other hand, Coles and Woolworths themselves have suggested a code of conduct with their suppliers. That was their suggestion, not ours. We have, though, having looked at the behaviour we've seen, said on balance we support the code, provided it's a workable and effective code. I'd regard that as not an extension of the law, because that's actually, a code is something you can do within the context of our laws. So I think we can work well within the context of our laws. Let's see how the code process goes. There's an active negotiation going on at the moment between the supermarkets and their suppliers. We're not involved in that. All we're saying, standing back from it, is let's make sure it's workable. So I think there's a few things to play out. Of course, we've got our investigations I talked about. So I guess my view would be let's see how all this plays out over the coming months to see where we are then.
Sure. To switch gears for a little bit now, I wanted to talk to you about the state of the New South Wales electricity sector.
Yes.
Electricity prices have become a hot button issue for many Australians who are dealing with rising cost of living, and particularly political since the carbon price. What are your views on the sector, and what are the main price drivers in the electricity market?
Oh, look, the main price drivers are extremely clear. Up until the introduction of the carbon price, so just prior to mid-2012 or up to mid-2012, prices in New South Wales had gone up by almost 100% over 5 years. So when people complain about high electricity prices, they have every reason to complain. I mean, this is a necessary purchase. It's one you make every couple of months. It's a high cost purchase. I mean, water doesn't cost you that much, but electricity costs you a lot. So when the prices go up about 5 times, whether you're a small business or a big business that's dependent on electricity, or you're a consumer, it hurts. Now, why did that happen? Up until mid-2012, overwhelmingly network prices and what I've called elsewhere ridiculously high level of subsidies given to solar panels.
Okay.
But overwhelmingly network, and solar panels a distant second. The network problems were, in my view, due to poorly thought through regulation. The Australian Energy Regulator was, if I could say, lumbered with quite inappropriate regulatory structure that had to work within. So when the network businesses, who are monopolies, there's no question they're complete monopolies, and I don't think anybody questions they should be regulated, but the rules under which they were regulated, which were put in place, say 8 or 9 years ago now, were that the AER had to accept what the monopoly business put to it, unless it could show that what was put to it was unreasonable, and it could only knock back the bid to the minimum extent necessary to remove that unreasonableness. The evidentiary burden on the AER was huge. If you just think about what the AER's got to look at, CapEx estimates, OpEx estimates, the rated average cost of capital, the rate of return they're allowed. Any one component of that, of any of those three things, has a range of what you might consider reasonable. And if what you are is up the top end of reasonable all the time, then bills go up. So what we saw under that regulatory regime in New South Wales was the capital spend of the network companies in New South Wales tripled.
Wow. From
one 5-year period to another. Network businesses are fixed cost businesses. Fundamentally, it's basically return of and return on capital that drive your network costs.
Sure.
And network costs are about 50% of the average residential bill. So that's what drove the high prices. That was the problem. It's only recently been fixed, but that just shows when you get misconceived regulation, when the rules aren't right, there can be very high costs. Likewise, as I've said many times, ridiculously high subsidies on solar panels. They're now unwinding those, and Chris Harcher in New South Wales has done a great job in unwinding that. Commonwealth's unwound some of it. So that's what drove it. And then, of course, you had the carbon price on top in mid-2012. Sure. But I think one has to keep in mind those other two things because they were problems that should not have occurred.
I see. We've heard a fair bit of alleged gold plating of the electricity infrastructure. Julie Gillard was particularly vocal about this last year, about over-investment in the infrastructure and the impact that's had on electricity prices. Is this something the public should be worried about too much now?
Well, it's the gold plating that is spending more than perhaps you needed to. I mean, a tripling of capital expenditure in one 5-year period to the next. I think some element of that you could fit under that heading.
But you say the regulation has changed.
I think the regulation has now fixed it. The horse is bolted, and so you're sort of closing the door after the horse is bolted. The good news is capital spend may not need to be that large in the future because they've spent so much to cater for future needs. But look, I think that was the problem, and it was very much a regulatory regime that wasn't well suited to the task it was given.
Okay. The New South Wales government committed to bring down the price of electricity, of course. That's what the electorate wants.
Yes.
How much more how much more can the government do, if any, to bring down the role of prices, to bring down prices?
Well, the New South Wales government's participated with other governments to change the rules. So that's one thing that they could do and they have done.
Sure.
Secondly, they've reined in the subsidies for the excessive subsidies for solar panels. That's another thing they could do and they have done. The only other thing that I think is on their list is to look at whether the reliability standards for the network businesses are possibly too high. That is, you're requiring them to spend to meet high standards. Because the other factor, the other factor I didn't mention earlier was that not only did the rules change, but the government pushed up the standards.
Sure.
So, in Sydney, for example, rather than having to meet an N-1, that is, if it fails, you've got a backup, they changed it, you've got to meet N-2. Now, having, when it fails, not one backup, but two is enormously expensive. You've got to connect a whole lot more things than you otherwise would have. So, in a sense, I think they could look at those as well.
I see. All right, well, Rod Sims, thank you very much for joining us here at the Centre. It's always a pleasure.
Thanks very much, Alec. A pleasure.